I'm going to treat you guys as if you do not know anything about Forex. So I'm going to use analogies that can relate to people in everyday situations and stuff like that. I'm going to really try to be very elementary with it, with how I break down the ins and outs of Forex for people such as yourselves that don't know anything about Forex. So with that said, I do want you guys to know there is a chat box. If you have any questions, do me a favor, throw them in the chat. And my team will help answer them. If they can't answer them, I'll revisit them at the end of the presentation. And then I'll also get, we'll have a Q&A where you guys can unmute if you want, unmute, ask questions, do whatever, share concerns, critique the presentation, whatever you guys want to do. I'm open for anything. Me and my team are here to be transparent. We are just here to present you with the proper education of this financial vehicle, so you guys can decide whether or not it's something, an income opportunity that you want to take advantage of. Okay. This is a skill set that anybody can learn. Okay. Anybody can learn. Okay. So, before we get into the presentation, I want you guys to do me a favor and drop all guard down of what you might think towards the skill set of day trading, trading Forex, trading stocks, anything that consists of trading. Just drop all barriers and just allow me to present the knowledge, the information, and just soak it in so you can make an educated decision. Don't let something deter your decision of whether or not this is for you, like thinking you can't do this. Okay. Don't go into this thinking that this is something that anybody can do. It's a skill set. It's very easy. High school dropout can learn this. Okay. So, and I'm going to show you along the way, I'm going to help you cut down those barriers. Okay. And get you to understand that this is a skill set that pretty much your everyday average person can learn. Okay. And capitalize on. So, that's the intro to Forex. It is presented or brought to you by Dynasty Xchange. And it is presented by myself, Brian Dupuis. A little bit about Dynasty Xchange to give you a quick breakdown. What Dynasty Xchange is, it's actually morphed into so many things, but it actually started off as a vision. And it was a vision of myself and a few of my business partners and some like-minded traders. And that vision was to create as many successful independent traders as we can. Now, with that vision, and this was like 7 years ago. And we did it for a little while, and we really enjoyed it. We were able to impact lives across the globe. We really enjoyed it. We partnered with the company back then, and the partnership ended up not working. So I went on and did some other stuff. But we're back here. We partnered with another company about October 1st, the 1st of October. We partnered with another company. It's an online educational platform for Forex, for teaching Forex. Okay, it's basically like Yale or Harvard or something like that online. Okay, for Forex, it's a top of the line Forex educational multi-million-dollar platform. But you can consider it like a university. Okay, like an Ivy League university, if you will. Okay, and what Dynasty Xchange is, what it has become kind of like the fraternity or sorority inside that college. Okay, the top, the creme de la creme of sororities or fraternities. It's a very tight-knit family. So we started off with basically just a movement of changing lives, and we've morphed into this more of a community, or even what we like to say in Dynasty Xchange is we're a family. Truly a family. We've cried together. We've laughed together. We've been very vulnerable together. We obviously learned together. So it's amazing. That's kind of what Dynasty Xchange has morphed into. Here we are, 2021. We started, like I said, October 1st, and we are upwards of 10,000 members just within Dynasty Xchange, just within our core organization. And then Epic Trading, which is the college, the online educational platform, or the college, they have grown to like upwards of 50,000 people just since October. And it's across the world. We have teams in Canada. We have a big team. A lot of people on here are from Canada. That's our huge, awesome Canadian team, ran by Mr. Mike Dizon himself, who's on here. And then we have teams in Australia, teams in the Caribbean, teams overseas in Africa, teams in Europe. It's crazy, guys, in just since October. So it's pretty amazing. we're able to impact lives across the globe by utilizing this online educational university, which is Epic University. So it's a great partnership. It's working out. It's working out phenomenal, and it's so awesome. We have like a dozen traders within Epic. And then we have so many more traders in Dynasty Xchange you can learn from. So a little bit about Dynasty Xchange, a little bit about our partnership with Epic Trading. Myself, Brian Dupuis, I've been involved with Forex since 2000. I bought an infomercial off of a TV infomercial and didn't learn anything. And then fast forward 2 years, in 2002, I got a job at a Forex money management firm. And I was just a caller that just, spoke to people that were interested in investing money. But I saw the way that my bosses lived, the owners of the company, the traders, the master traders, living this lavish life, $1 million homes, $1 million, just sports cars and, and living the lavish life, and I was very intrigued by it. So worked there for about 8 to 10 months and learned a lot about Forex back then. Remember, this is almost 20 years ago. Much different back then than it is now. But I saw the way they lived and I learned a lot. And then I ended up starting my own business in a different industry for like 10 years. Fast forward to 2013, like I said, is when we created this movement about 2013, 14. And here we are, fast forward 2021, we found our partnership and they're amazing. Epic Trading is amazing. And here I am now hosting these classes and just educating the masses across the globe on what exactly Forex is, how every individual in the world has the same opportunity to take advantage of this financial market. Okay. So a little bit about myself, a little bit about Dynasty Xchange. Let's go ahead and hop right into it. Remember, there is a chat. If you guys want to drop some questions in the chat, please feel free to do so. I will try to glance back into the chat while I'm going. And if I see something that I can touch base on, I'll do that. But like I said, at the end, once I go over everything, I'll open it up so you guys can ask questions or whatever you want to do. Again, we are here to be transparent. We are here to just provide you with the correct knowledge about this financial vehicle. Okay. Social media gives it a bad rap. A lot of people think it's something you can join. A lot of people think it's a scam. Okay. It's definitely not a scam. If it's a scam, then you call the New York Stock Exchange a scam because it's the same exact thing on a more massive scale. Okay. So I'm going to open up your eyes and enlighten you to the abilities of this financial vehicle. So, okay. So let's dive in. So I'm going to go over 3 sections. Okay. Three key sections. In each section, we'll talk about different topics. So in this first one, first section is going to be what is Forex? We'll talk about what is Forex. We'll talk about how much you can make or lose. Now, I want to stress lose because again, we are here to be transparent. You can lose a lot of money. Okay. Just like in any investment opportunity, you can lose a lot of money. We are here to show you how to not lose more than you make. Okay. So we are here to show you how to be profitable. Yes, you are going to lose trading. In any type of trading, you are going to sustain losses. Okay. But we are here to show you how to profit more than you lose. Okay. And we'll talk about daily, monthly, and yearly volumes as compared to the New York Stock Exchange. So what is Forex? All right. Well, Forex stands for foreign exchange. That's it. Foreign exchange. All right. It translates to the exchange of currencies worldwide. All the global currencies, okay, can be traded. Okay. So that's what foreign exchange stands for. Okay. It's it translates to the exchange of currencies worldwide. In short, Forex or foreign exchange is the global financial market. It is the market of markets, okay? The New York Stock Exchange, the London Stock Exchange, the Asian, those are all national stock exchanges, right? Correct? The foreign exchange market isn't actually the global financial market, okay? There is no market that is bigger than this market, okay? That's why big banks, big institutions, this is where they put all of their money. They put their money when they make money doing whatever they're doing, they take it and they invest it into the Forex market. Okay. So chances are if you've traveled outside of your country, you have actually participated in foreign exchange. And what I mean by that is if you've traveled outside your state, because I know we might have some people here that might be out in the Philippines or in Canada or what have you. So if you've traveled outside your state, when you landed in the country that you're going to, you've had to visit one of those currency exchange counters, right? So to exchange your country's currency for the currency of the country that you're visiting. Now, when you do that, okay, between every currency, there is what we call a price rate. Okay. And that price rate fluctuates every millisecond. It's always going up and down. It's always fluctuating 24 hours a day, 365 days a year. It is always fluctuating. When you go to that exchange counter, okay, the moment that you go there, they lock a price rate in, and that's the rate that you get when you exchange currencies. Okay. So if you have done that, you have actually participated in foreign exchange. The difference between what you have done and what we have done is you do it in the physical format and we do it in a digital format. We are able to do it online through a trading platform. Okay. Now, Forex is similar to any type of other trading, stocks, futures, whatever it may be. It does use graphs or charts, okay, to track the price movement or the price value. Okay. You can make or lose a significant amount. It depends on your knowledge and how, you're going to hear me say this a lot, how you implement the skill set. Okay. How you implement the skill set, because me and you, every one of you can learn the same amount of knowledge and have the same exact knowledge, but the way we implement it is what is going to affect our income. Okay. Our profits. Okay, so now I want you guys, in a little bit, I'm going to show you a graph on here. If you haven't seen a graph, I'm going to show you a graph. If you have seen a graph, I'm going to show you a graph and break down the barrier of thinking it can be intimidating looking at the graphs, okay? But again, we do use charts and graphs to track price movement. Now, the difference between the Forex financial market and the stock market is the stock market trades companies or the value of that company's stock, right? So it's one entity that graph is tracking. So even if you don't know trading, you know that if the graph goes up, you make money. If the graph goes down, you're losing money, right? The value is getting more valuable when the graph goes up, and when it goes down, it's getting less valuable, right? Well, the difference with the Forex financial market, we use currency pairs. Okay, we trade currency pairs. So now there's not just one entity involved. There's two entities involved, right? So if there's two entities involved, each one has to have the ability to get more valuable than the other, okay? Each one has to have the ability to get more valuable than the other, okay? So now we're dealing with two entities, okay? So the first analogy that I like to use, guys, is when you see the pairs, this is what they're going to look like. This stands for the US dollar, USD, and the JPY, Japanese yen. Okay. Now, the first pair, okay, I like to refer to, what I like to do is I like to compare this to a team sport game. Okay. Two teams, right? Team sports, doesn't matter what sport it is. Could be basketball, football, cricket, polo, whatever. There's two teams, and those two teams are fighting to get stronger, or in this case, to get more valuable. Okay. They're striving to get more, they're fighting to get more valuable. Okay. So and in team sports, whatever it is, there's always what? There's a home team and an away team, right? So what I want you to think of is here, when we see the US dollar and the Japanese yen, the first pair, no matter what pairs it is, the first pair is going to be, I refer to the home team. Okay. And the second pair, in this case, JPY, is going to be the away team. Okay. So picture the graph being the scoreboard. Okay. The graph is the scoreboard. And then on the scoreboard, you usually see up in the top left-hand corner, you usually see the two teams, right? Home team and away team. So think of that when we look at a graph. Now I want you to throw that in the back of your mind. Don't forget, in about 2 slides, we're going to dig deeper into this home team, away team. So the graph is going to make more sense to you guys. Okay. So before we go into that, I want you guys to know that the Forex market, something very unique about the Forex market is, unlike the stock market, futures and all that stuff, it's not just open during national banking hours, okay? Any stock exchange around the world, it's only open during banking hours of that time zone, right? Just like the New York Stock Exchange, it's only open from 9 a.m. to like 4 p.m., right? Why? Because those are kind of like the banking hours of the Eastern Standard Time, right? So the Forex market has the ability to stay open 24 hours a day, 5 days a week. Now, the reason being, okay, oops, sorry. So And it opens Sunday. If we go by Eastern Standard Time, okay, it opens Sunday at 5 p.m. Okay, and it's open 24 hours. We can trade 24 hours a day, all the way until Friday at 5 p.m. Eastern Standard Time. Okay, now there's the reason being is the market is broken up into 4 major sessions. Okay, or what I like to kind of refer to them as is global market time zones. Okay, global market time zones, but we call them sessions. Okay, in trading you call them sessions. Now these sessions are known as New York, London, Tokyo, and New York, New Zealand, Australia, or Sydney. Sometimes people call it the Sydney. Okay, so basically what happens if we look at this chart right here, we have a 24-hour time clock at the top, right? Now we said it opens at 5 p.m. Eastern time, right? So if we do 5 p.m. Eastern time, 24-hour time clock, that would be 1700, wherever you're at, that would be 1700 hours. So Eastern time, 1700, which is 5 p.m. Okay. In reality, in Australia, it's already Monday morning because they are ahead of us, right? It's already Monday morning. So really, in reality, the market is opening in Sydney, but we are allowed to start trading it Sunday our time because the market is opening Monday morning in Sydney. Okay. And then all the market does is it just follows these global time zones. They all overlap. When they open, they overlap each other. So this allows the market to stay open 24 hours a day from Sunday night until Friday night. Okay. And then it closes down over the weekend. Okay. So it's a very unique opportunity if you have a busy life. If you can only trade in the middle of the night, you have the opportunity to do so with this financial market. Okay. So how does Forex work? Here's where we're going to revisit that home team, away team analogy. Okay. Sorry about that. So now remember what I said, the graphs, okay? The graphs or the charts, okay? The money is in the graphs. No matter what you're trading, you have to look at a graph because that's where the money's at, okay? It's tracking the price movement, okay? Now, if you think that the graph, remember, this is the game, US dollars versus Japanese yen. If you think the graph for this game is going to go up, okay? You're saying you believe the home team is going to be stronger or more valuable than the away team. Okay. If you think the graph for this game is going to go down, you believe the away team is going to be stronger than the home team. Okay. If you think the graph's going to go up, you think the home team is going to start beating the away team or be more valuable. Remember, I said, now that there's 2 entities, each entity has to have the ability to get more valuable than the other. Each currency has to be able to get more valuable than the other. So it has to, in order to do that, the graph has to go somewhere and for each one to be able to be more valuable, right? So if you think the graph's going to go up, you're saying the home team's stronger than the away team. If you think it's going down, it's the opposite. The away team is going to be more valuable than the home team. Okay. Now, in order to make money in the Forex market or any market, you have to place a trade. Okay. In this market, we could place what we call buys and what we call sells. Okay. Buys or sells. So if you place a buy on this game, you believe the home team is going to be stronger or more valuable than the away team. Okay. A buy is going to be strong. The home team, you're going for the home team. Okay. However, if you place a sell, you believe the away team is going to be more valuable than the home team. Okay. Now, if we put those two together, simply put, if you place a buy, okay, very easy, guys, listen to this. If you place a buy, you are rooting for the home team and you want the graph to go up. Okay. If you place a sell, you are rooting for the away team and you want the graph to go down. Now, think of that. Now we have each entity has the ability to get more valuable than the other. Now, if we do an analysis on the graph and our analysis says that, hey, we need to root for the home team, we're going to be looking to make money go on the upside. Okay. If we do the opposite and our analysis says that we want to place a sell, which means we're going to be rooting for the away team. Yes, the graph is going to be going down, but because we are rooting for the away team, it still means the away team is getting more valuable. Okay. So we can make money on the downside as well. That's another unique thing about this financial market. That's why, when the pandemic hit in March, or when we had that US economic crash in 2008, Okay. You know how many people lost their entire 401k when in 2008 because they had their 401k vested in the New York Stock Exchange. Okay. So when all of the stocks just crashed, nobody made money. Everybody lost everything, right? If you were a Forex trader, there's Forex traders who actually became millionaires during that 2008, billionaires even during that 2008 economic crash because they were able to capitalize on the US economy crashing and going against it in the currency. Okay. So another unique thing, guys, there's so many unique things about this financial market. It's amazing. So again, if you place a buy, going for the home team, looking for the chart to go up. If you place a sell, going for the away team, looking for it to go down. All right. Okay. So Forex versus stocks. All right, so let's talk about the first off, the New York Stock Exchange, daily volume. Remember, it's only open from 9 a.m. to 4 p.m., whatever it may be. Daily volume is upwards of $200 billion per day. $200 billion with a B are moved through the New York Stock Exchange. So imagine if you were able to get a nano fraction of the profits out of that. Okay, we'd all be millionaires. We wouldn't have to worry about it, right? We'd have plenty of money. We'd be able to live. So now remember, that is a national stock exchange. That's a national financial market. We are talking about a global financial market, not a national one. So imagine how much money, and a 24-hour one. So imagine how much money goes through this financial market. Okay. There's over 6 trillion. It's upwards. It's like $6.8 trillion of daily volume goes through the Forex market. Remember earlier I said big banks, big institutions, they all put their money into this market. This is why. Okay. 6 trillion compared to 200 billion. Think of that. That's why big banks and big institutions put their money here, because there is so much more profits to capitalize on. Okay. That's why we are showing you guys this financial vehicle. Okay. There's so much unique things. This financial vehicle cannot be hindered by anything. In other words, like I said, if you got into stocks and there was an economic crash, you're losing money. It doesn't happen this way. No matter what economy were to crash, even the global economy can crash. But because we are going currency versus currency, there's always going to be one that is more valuable than the other. We just have to figure out which one we need to go with, okay, to make profits. So over $6 trillion in daily volume, over 30 trillion per week, and 120 trillion per month. Guys, that's just people and companies just throwing their money into the market. So why not capitalize on it and try and get profits off of it, right? Let's figure out how to build that financial security, because that's what all of us are really looking for. Financial security, not a quick buck, not a get rich quick scheme. Get rich quick schemes lead to get broke quick. Okay. So bulls versus bears. What are we talking about here? Bulls versus bears. We are talking about direction in the market. Okay. Up, down. The market goes up, the market goes down. Okay. Even when it's consolidating, it still has up and down movement. Okay. So we're talking about direction here. Okay. So in any financial market, if the graph goes up, remember, graph is price. So we're really talking about price. Okay. The price fluctuation. So in any market, if the graph goes up, it's considered bullish. Okay. Bullish. The bulls are running the market. Okay. It's the bull heavy market. Okay. Now, if the graph goes down, it is considered bearish. Okay. Now, the best analogy I have for this, guys, really quick, is think of these two animals when they are feeling threatened and they go to attack. How do they attack their enemy? Well, think of a bull when he's in a bullfight with a matador in the bullfighting ring, when the matador's got the red cape and he's, aggravating the bull. How does the bull attack him? Okay. Well, you might have seen little video clips of a bullfighter where he gets scooped off of the ground, right? And thrown up in the air by the bull's horns. So the bull, when he attacks, he drops his head and he attacks in an upward motion. Okay. Bulls attack in an upward motion. Bullish is up. Okay. So same thing with a bear. What does a bear do when it attacks its prey or it feels threatened? It stands up on its hind legs and it strikes in a downward motion with its front claws, right? So bears strike in a downward motion. Bulls strike in an upward motion. Bullish is up. Bearish is down. Okay. Direction, knowing the direction of the market is very important. Okay, so let's look at that on a chart, okay? So this is a bearish market, or we call it a buy setup, okay? Now, this is where I want to break the taboo of those of you who might have seen charts like this. You might have seen a trader, okay, sitting at his desk like I am, and you don't see it, but I have 4 screens here, okay? I have 4 screens around me, okay? You might have seen that where they have a whole bunch of charts up all over the screens and all that. So I'm here to break the taboo of individuals like yourself who don't know about trading, thinking that it is a very intimidating skill set or something that you have to have 4 screens and have 20 charts up. Listen, nowadays, guys, you can trade on this little device I have in my hand right here, okay? Cell phone. You can literally trade full-time trading on your cell phone if you wanted to, okay? So don't let what you've seen in the past of somebody sitting in front of a whole bunch of screens and looking at all these charts and watching news and all that stuff. It just isn't like that. That's not how modern trading is anymore. Okay. Now you do have to, however, look at a chart like this. Okay. It could be on your phone. It could be on your laptop, whatever. Okay. So what I want you guys to understand is these charts. Well, first off, what they are is these red and green bars is what we call that. They are what we call candlesticks. Okay. And if you see how they're different sizes and they have these are wicks at the end, the tops and the bottoms, those are called wicks. Now, what this is, the different size candlesticks and the different size wicks and the red and the green and the up and the down, what that is doing together, all together, that is telling a story of the price rate between the 2 currencies. Okay. If you look up top here, remember I said we have the home team and the away team. In this case, it's US dollar and the Canadian dollar. So what is this chart telling us right now? This chart is telling us that in this section right here, they are kind of fighting back and forth. They're still going up and down, but they're kind of fighting back and forth. And then what happens here? The bearish, remember when it goes up, we are looking for the home. That means the home team is getting more valuable, right? So that means the US dollar is getting more valuable than the Canadian dollar. Okay. So all these candlesticks are doing is they are each of them have a specific amount of data. Okay. And together, all the candlesticks do when they form this graph is tell a story about the price rate between the 2 currencies. Okay. And what we do is we teach you how to read that story. Okay. Simply put, and I really want you guys to soak this in. This graph, all it is doing is it's telling a story. Okay. Think of it this way, guys. The best analogy I have is if I were to give you a book and it was in a language that you don't speak, okay, and you opened it up and realized it was in a language you don't speak, you would throw it back at me and you laugh in my face, right? But if I taught you that language for 6 months to a year, what would happen if I gave you that book then? Instinctively, you're going to open the book up. You're going to start reading it automatically. It's just going to make sense, right? It just makes sense to you. Same thing with this. When you start to see the language and the code or the story that these candlesticks are telling you as it forms this graph, you are going to start to be able to read the story, and the story will basically tell you, hey, Brian, when you see these type of candlestick patterns start to form, it's most likely, not all the time, most likely you are going to see a bullish market. Okay. So you're going to want to start to look for a buy setup or going for the home team. Okay. Looking for the graph to go up. Okay. So that's it, guys. Simply put, these graphs tell a story, and we teach you how to read the language within the candlesticks. Okay. So now on a bearish or a sell setup, a bearish market, okay? This is a bearish market, okay? Something up here in these candles start to tell us, hey, Brian, when you see these candlestick patterns, most likely we are going to go into a heavy bearish trend, okay? So now, possibilities of trading. Well, first off, as most people know, investing in anything in general, can sustain a considerable amount of risk. So we always recommend that you guys utilize capital, dispensable capital. Okay, dispensable capital, what is it? If you're not familiar, if you put $500 in your hand and I ran by and snatched it out of your hand and took off, it would not financially hurt you. or affect you in any way. That is dispensable capital. We don't want you using your kids' college fund or your part of your mortgage or anything like that. Okay. We want you to use dispensable capital so you can build that college fund and pay that mortgage. Okay. Now, after gaining the proper knowledge and using your discipline's huge, guys. We'll touch base on that a little bit. Emotions and discipline. In time, you can begin to replace your current income and work on doubling, tripling, and yes, even 10 timesing that income. Okay, which can lead us to finding that financial security that we all want to find. Okay, now you heard me kind of say this about reading the story, learning how to read the language and stuff, 6 months to a year. Literally, guys, after as little as a year or less of studying and trading with a decent account size, it is definitely possible to see upwards of 6 figures or more. Okay. What did I say before? It all depends on what? It all depends on the individual and how they implement the skill set. Okay. It all boils down to how you implement the skill set. If you cannot implement it correctly, have your risk management under control, you will not be a long-term successful independent trader. Okay. So how do I trade? All right. Well, how do you trade? What do you need to do to be able to start trading? Okay. First off, you have to have a broker. What is a broker? Broker is similar to a bank account as it allows you to deposit and withdraw money. Okay. You can deposit money, you can withdraw money. Okay. Now the difference is it's kind of like your sync to be able to trade your money on the Forex software platform. Okay. So it's basically like your link to the matrix. Okay. Look at it that way. You deposit your money into a broker account. You can virtually link your broker account to the trading platform. And that's what allows you to trade your financial your money on the Forex platform. Okay. There's several brokers to choose from. They're all over the world. They're not just here in the United States. There are some offshores as well as onshores. Onshores US, offshores is anywhere else outside of the US. You always want to do your research and choose which one's right for you based on the 3 things that we try to focus on are fees. Okay. Just like a bank, they need to make money somehow. So they make money when you place trades, small, very, pennies or whatever. Fees, withdrawal time, and then reliability. Okay. Reliability is important because the US brokers, they have to follow strict guidelines and regulations. The ones outside of the United States do not. So there are offshore brokers that are very reliable. You just, like we say here, do your research. Okay. Remember, if you guys have any questions, don't hesitate to ask. Okay, in this section, this is the second section. We got one more after this. So in this section, we're only going to talk about 2 things, guys. And this section is basically based around how much you can make or lose. Okay, we're going to talk about what is a pip, okay, and what are lots. Okay, 2 most important things. If you don't know what these things are, what they do, you will not be a successful trader. Okay, that's why we utilize this one section just for this. So what is a pip? What is a pip? Okay. What is a pip and what does it represent? Well, it represents a percentage increase point. Okay. Is that important? Absolutely not. If you have a pen and paper, don't worry about writing this down. Okay. It's not important. But you're always going to hear it as pip. Okay. Pips or pip. How many pips did you catch today? Oh man, I caught 100 pips. Pips pay my bills. Okay. You're always going to hear it as pip. So the important thing here is not what it stands for, but what its function is. Okay. That's the most important thing. What is its function? What is its function, you ask? So what it does is a pip is how the market is measured. Now, I want you to think of, remember the graph is our scoreboard, right? Okay. Think of it this way. A pip is how the score is tracked, how the score is kept between the home team and the away team. Okay. So a pip is how the market is measured or how the score is tracked between the home team and the away team. All right. So depending on the currency pair that you are trading, a pip can equal 10 cents, $1 or $10, 10 cents, $1 or $10. Okay. And we'll get into that. We'll get a little deeper into that in just a second. All right. So what the heck is a pip? Let's look at a visual. Okay. If you remember the graph that I showed you a little while ago, on the side, right-hand vertical side, okay, there are numbers and they go up. They start at 0 and they go up 1.0 something. Okay, so those numbers usually look like this, where it's 1 digit to the left of the decimal and 5 digits to the right of the decimal. Now the 5th digit we don't really pay attention to. Okay, that's not really important. The 4th one is the one that we want to pay attention to. That is the pip. The fourth digit to the right of the decimal is the pip, okay? Now, the fifth digit is a micro pip or a pipette. Now, the reason we don't really worry too much about that is the pip always moves enough that it moves in. The market always moves enough that it moves in pips, okay? Think of it this way. Think of this analogy, guys. If you had something that was 2 or 3 foot long, we wouldn't measure it in centimeters or millimeters, right? We would measure it in inches or feet, right? Same thing with this. We don't have to worry about pipettes because the market always moves enough that we can measure it in pips. Okay, so we start the measurement here, 1 pip. Now, if this number were to go from 683 to 693, okay, 683 to 693, that's 1 pip rise in the market, okay? That means that the home team is winning. When this number goes up, okay, when this number goes up, that means the home team is getting more valuable, okay? The home team pair is getting more valuable. This number goes down, that means the away team is getting more valuable, okay? Now, if it was to go to 673, that's 1 pip for the away team, okay? Yes, the numbers are going down, but remember, when the numbers go down, that just means the away team is getting stronger because these numbers represent the home team, okay? So the 6, the blue number, is 10 pips. So if this number were to change from 683 to 783, okay, that's 10 pip for the home team, 10 pip rise for the home team, okay? If it was to go down to 583, that would be 10 pips for the away team.
You need to update
Meaning, if we were to place a sell, which means we're rooting for the away team, okay, and this number were to go down from 683 to 583, that means we just captured 10 pips for the away team, okay? So does that make sense? Hopefully that makes sense. The second number, the gold one, is 100 pips of movement. And the green, the first digit to the right of the decimal, is 1,000 pips of movement in the market, whether it's up or down. Those are the thousands, hundreds, 10 singles. Okay, make sense? All right, so what are lots? Okay, well, first off, let's recap. What is a pip? Okay, a pip is how the market is measured. A pip keeps the score between the 2 teams. Okay, if the numbers are going down, that means the away team is winning. If the numbers are going up, that means the home team is winning. Okay. Now, what are lots? Okay. What is a lot in Forex trading? How is it used for trading? Okay. So a lot refers to a bundle of units in a trade. Okay. Essentially, it refers to the size of the trade. Okay. If you guys are familiar with stock trading, when you place a trade, it is called a contract. Okay, what size contract did you place? Okay, in Forex, in the Forex financial market, a lot is the size of the trade that you place. Okay, it refers to a bundle of units of the home team. Okay, now there's 3 commonly known lot sizes. Okay, the first one, the biggest one, okay, the biggest size trade that you could place is a standard lot. Okay, this is equivalent to controlling 100,000 units of the home team. Okay, so when we were talking about the US dollar versus the Japanese yen, if you placed a standard lot trade on that currency pair, you are controlling 100,000 units of the US dollar. Okay, so if you're buying, that means you are buying the US dollar. That means you want the US dollar to get stronger. If you are selling, if you place a sell on the US dollar, Japanese yen, that means you are selling the US dollar and you want the US dollar to get weaker. Okay. So the other 2 commonly known lot sizes are a mini lot and a micro lot. A mini lot looks like that, 0.10, and a micro lot looks like 0.01. Okay, smallest trade you can place is a micro lot. Now you can double these lot sizes up, meaning you could do a double, a triple, a quadruple on any of those lot sizes. So you could do a 2 standard lots, which is 2.00. Okay, or you could do 2 mini lots, which is a 0.20. Okay. So you can do multiples of each of these 3 commonly known lot sizes. All right, now increasing your lot size over time will in turn increase the amount you can win or lose. So you want to be very, very cautious. Okay, remember a lot refers to the size of your trade. So if the bigger size of the trade that you place, the more money you can make or lose, right? So you always want to be cautious about your lot size. Proper lot size is very important. We'll talk about that in the next section in risk management. Okay, so lots explained. Okay, now, micro lot, the smallest size lot that you can place. You're controlling 1,000 units of the home team. Okay, every pip movement in the market, if you place a buy and it goes up, the home team starts winning by 1 pip. You get, for every micro lot that you place, you get 10 cents per pip of movement. Okay. For every mini lot, you're now controlling 10,000 units of that home team. Okay. You're making $1 per pip. For every pip you capture in the market, you're making $1. Okay. Now you guys are probably looking at me like, hold on, he's talking about financial security and all this other stuff. So bear with me and it'll start to make sense. Even though it's showing 10 cents, how do you build financial security on 10 cents a pip? Okay. Well, it makes sense. It'll make sense in just a second. Okay, so a standard lot, we already spoke about how that allows you to gives you 100,000 units of that home team. You're now making $10 per pip of movement. Okay, so if we look at this last example, it shows us what would happen if we caught 15 pips of movement. Okay, what can 15 pips do for you? Now, what I want to do is I want to do it even better, because 15 pips is pretty easy to capture. You can capture 15 pips and you can capture 15 pips in 5 minutes. Okay. So let's talk about when we capture a decent amount of pips. So let's say that we can capture 60 pips. Okay. 60 pip move in the market in just one sitting. Okay. Like one session of trading. Okay. So let's say we place a standard lot. That's this one right here, 1.0. Okay. For every 15 pips of movement, we make $150. Why is that? Remember, we place a standard, we're getting paid $10 per pip. So for 15 pips of movement times $10 is $150, right? So if we do 60 pips, that's 4 times that. Now we've made $600, right? 4 times 150, $600. Okay, 60 pips. That's in one trade, $600 on one standard lot. Okay, one standard lot is $10 per pip. If we place a standard lot and we make 60 pips, that's 600 pips. I mean, that's $600, right? So now imagine, now the thing is when a trader sits down to trade, each session he sits down to trade, he or she doesn't just place one trade. They might place 5 trades, 10 trades, 15 trades, just depends on how many setups they see. Okay, it might be a really good day of trading. They might be able to place 10 winning trades, you know? So imagine if you were to just do 5 of those trades, two of those trades, right? 600, that's $1,200 in a day. So it starts to add up. Okay. We have well, I'll talk about that when we get to compounding, which is in this section now. So this is the third section. This is the last section. Remember, guys, if you have any questions, throw them in the chat. Risk management. Okay. Risk management to me is the most important thing that you should definitely learn how to master. All of the different aspects of risk management is probably, to me, the most important thing if you want to be a long-term successful independent trader. All right. So risk management. All right. In this section, we are going to talk about these first 2. Give me 1 second, guys. Let me take a sip of water. Okay. So these first 2 that we're going to talk about, what they are is there's something that we refer to as set it and forget it trading. Okay. Set it and forget it trading. Now, it's going to be controlling losses and taking profits. Okay. Set it and forget it trading basically is a lazy way of not, it's a time saving way of trading. Okay. You can throw a trade on and just let it go and it will automatically close itself out. Okay. And we'll get more in depth about those. We'll talk about proper lot size, as I said earlier. We'll talk about greed or emotions, and then we'll talk about compounding. Compounding is super, super important. If you don't know the power of compounding, you can end up, you won't end up realizing the power, the amount of money that you truly can make if you know how to compound. Okay, you guys might have heard of compounding interest. Okay, so controlling losses. Let's start with controlling losses. Now, this is the first half of set it and forget it trading. Okay, the first half of set it and forget it trading. Okay. One of the best things about Forex is it allows you to control your losses by using a stop loss. Okay. Stop losses can prevent you from losing more than you are willing to lose on any given trade. Okay. The analogy I like to use, guys, is it acts as a bodyguard for your account. It protects the money that you already own, the money that is in your broker account. Okay. So when you open up a trade, if you don't activate a stop loss, you are actually, if you were to walk away from that trade and the market went against you, you can lose everything in your account. Okay. A stop loss is kind of like a bodyguard that doesn't allow that to happen. It allows you to minimize your risk, minimize your losses. Okay. So example, let's say your account is $1,000. All right. And you want to risk, we teach our students to only risk 5%. Try to only risk 5%. Each time you sit down to trade, only risk 5%. Now, what has that done, guys? Now it's not really a risky investment. Now we're talking more of a conservative investment. Risking 5% every day that you sit down, you're only going to risk 5% of your total account. Okay. Now we're talking about a very conservative investment opportunity. So your account is $1,000. You only want to risk 5% on a mini lot, which is a 0.10, which is how much per pip, $1 per pip of movement. Okay. $1 per pip. We want to risk 5% of $1,000. Okay. Then you would set your stop loss at 50 pips. Why is that? Well, $1 per pip, 50 pips would be $50, which is the 5% of your $1,000. 5% of $1,000 is $50. So we want to risk $50, which is the 5%, which means we would have to place a 0.10, okay, $1 per pip. Okay. Now, you also have the ability, another unique thing about this opportunity is you have the ability to move your stop loss into profit. So now think of this, when you place a trade, okay, and you enter your stop loss, you are risking that 5%. Well, if you walk away, okay, Sam, yeah, man, enjoy that. Josh kicking one. Okay, enjoy it. Enjoy, brother. Yes, definitely go enjoy some steak and potatoes, some internal steak and potatoes with the team. Thanks, Samuel. I appreciate it, man. Have a good one, man. I'll see you around. I'll see you inside the DX, brother. Take care. Appreciate you hopping on. Enjoy that class. So now again, you do have the ability when you place a trade, your stop loss initially is going to be risking money, right? If the trade goes in the direction that your analysis says it's going to. So let's say we're going for the away team. We're looking for the chart to go down. We place our stop loss. Our stop loss is at 5% to risk 5% of our account. If the market goes for you and the away team starts winning, let's say that they start winning we're looking for them to win by 60 pips, but right now they're only at 25 pips, right? Well, we have the ability, while the trade is active, we have the ability to modify the trade, and we can move that stop loss bodyguard, and we can remove him from being negative, and we can put him in profit. And basically what that means is if the market has gone for the away team 25 pips, we can take our stop loss bodyguard and we can put him 10 pips in profit, which now means that if the market were to come back from 25 pips in profit and the home team starts winning and the market goes against us and it hits where we set our stop loss at 10 pips in profit, once it hits there, it's automatically going to close our trade out, and it's going to collect 10 pips of profit instead of risk 5% of our account. Okay, does that make sense? You can modify your stop loss. When you modify it and put it in profit, it now becomes a stop profit. Okay, so you have the ability to not only set a safety net, okay, a safety net bodyguard for your risk, that if you're not watching the trade, if it goes against you, it'll automatically close out at that 5% risk. You now have the ability to move that into profit to where you're not risking anything, but you're actually locking in profit. Okay. So that's one half. Stop loss is one half. Now let's talk about collecting profits. Okay. We spoke about protecting our losses. Now let's talking about collecting our wins. Okay. Alternatively, you're also able to place what is called a take profit. Okay. This means once price crosses your take profit, your trade will close automatically and lock in the amount of pips you set at, that you set your take profit at. Okay. Now, similar to a stop loss, a take profit is also like a bodyguard, but instead of protecting your losses, he is there to collect the profits that you set him up at, however many pips you set him up at. Okay. So let's look at that on a visual, on a zoomed in chart. Okay. So in this example here, we are talking about a sell, meaning we did our analysis. The analysis says that the away team is going to start winning. The chart's going to start going down. So we want to place a sell. Okay. So we would place a sell, and the market tells us that we want to place a sell at this price rate level. Okay. So we would place our sell here. Now, if the market went against us and came up here and it crossed our stop loss bodyguard is going to automatically close the trade out and only risk the 5% that we set him at. Okay. Now, if the market does what it did here in this example and it goes down and the away team starts to win and it hits your take profit bodyguard is going to say, okay, that's all the profits that my boss wants. We're going to collect these profits and I'm going to put them in his broker account, and that's it. They close out the trade. You wake up the next day, you got money in your broker account. Okay. It's that simple, guys. Set it and forget it. This is set it and forget it trading. If the market goes against you, it automatically closes out 5% risk, whatever you set it at. If the market goes for you, wherever you set your take profit at, it automatically closes out once the trade crosses that take profit. Okay. It's that simple, guys. Remove your emotions. This helps you remove your emotions as well. We'll talk about that in a second with greed. Okay. Proper lot sizes. This is very important, guys. Proper lot size, very important when it comes to risk management. If you don't know the proper lot size to place, you can over leverage and you can end up, if you have a small account and you put high lot, you're just losing more per pip. Okay. And you don't want to do that. So let's talk about that 5% again. Okay. Risking 5% on that $1,000 account with a 2-to-1 risk to reward. Now, a 2-to-1 risk to reward, what that means is whatever you are willing to risk, the 5% that you are willing to risk, you are willing to make, you only want to make a minimum of double that. Okay. So a 2-to-1 risk to reward on a 5% on a $1,000 account means you are risking $50. Okay. 5% of 1,000 is $50. We're risking 50 to make a minimum of $100. Okay. So let's say your analysis calls for you to calls for your stop loss to be set at 25 pips. Okay. We do an analysis. Analysis says you got to put your stop loss at 25 pips in case the market comes back a little bit. This means that you should trade a 0.20, 2 mini lots. Why is that? Okay. Well, if our stop loss is at 25 pips and we are trying to risk $50, how do we get $50 out of 25 pips? Well, we have to place a 0.20. Why is that? Because a 0.20 is $2 per pip. Remember, a 0.10 is $1 per pip. If we double that, it's $2 per pip. Okay. $2 times 25 pip stop loss is $50. So that respects our 5%. Okay. Now, this sounds a little crazy, guys. Like you have to know a formula or something like that. You don't need to be a mathematician. You don't need any fancy formula. This is a lazy person skill set. There's actually what we call a position lot size calculator that you can utilize right on your phone. You can have it right on your phone. And it takes like less than 5 seconds. What you do is you plug in the percentage amount that you want to risk, the amount of your lot or your account size, $1,000, how many pips your stop loss is at, and then what pair you are trading. You hit calculate. It tells you exactly what size trade to place. Okay. It will tell you to place a 0.20. Okay. It's amazing, guys. Within 2 seconds, you type it in, boom, hit calculate. It tells you what size trade to place. You don't have to do any math in your head, nothing. So it's awesome. Okay. Greed. Let's talk about greed. Okay. Or emotions overall. Greed or emotions is probably the biggest killer in Forex, hands down. Okay. 99% of traders will continually bet or predict instead of trade, or what we like to say, react to the market. Okay. And doing this, hoping to hit big and win the lotto. Okay. They want to explode and win, have big profits quickly. Okay. And that's just not how it can work that way, but that's not what you expect. That's not what you should expect. Okay. When doing so, after several wins, people will continue to risk more more of their account than they should and try and continue winning, and they'll usually end up blowing their account. Think of it this way, guys. If you ever watched a gambler in a casino, okay, when he starts winning a lot, what happens? He gets cocky, he gets greedy, okay, and he starts unresponsibly gambling, okay, and he kind of veers off of his strategy, okay, and then what happens? He starts losing, right? But you see those gamblers that take their emotions out of it and they stick to their strategy, okay, what happens? They end up winning, okay? So same thing on the downside, okay, on the negative side of it, okay? Greed also comes into play when losing, okay, consecutively. We refer to this as revenge trading. The same thing with a gambler. You see him lose half of his chips. What happens? He gets nervous, starts biting his fingernails. He gets greedy. He wants to get that money back, at least get that money back that he started with, right? What happens? He starts revenge betting, okay? He starts veering away from his strategy. And what happens? He loses more of his money, okay? So if you can overcome greed or your emotions, you'll definitely be on your way to becoming a successful trader. Highly, highly, highly. Get your emotions out of it. That's where that set it and forget it comes in handy. When you don't have to look at the charts and start seeing the market go against you and you start losing money on that trade, okay, your emotions can kick in, okay? So when you can do set it and forget it, it helps you remove the emotions. It helps you remove the greed. All right, the power of compounding your profits. The power of compounding your profits, okay? Really quick story. So this is actually the last thing that we're going to talk about. And then what we're going to do is we are going to go into what you get. I'll go into briefly what you get with epic trading when you decide to take advantage of, when you decide to become part of Dynasty Xchange family and take advantage of epic trading, what all you get with that involved with the scholar tuition, recurring tuition. Okay. So, power of compounding. Now, really quick story. We have an 8-figure trader inside Epic Trading. He's also part of Dynasty Xchange. He's a crypto genius. He teaches how to trade crypto and all that crazy stuff with crypto. He did a challenge with himself back in 2015. And a lot of traders do this when they know that they've mastered the skill set. They'll challenge themselves. What they do is they challenge themselves where they want to take a certain amount of money. They'll put a certain amount of money into a broker account and they want to grow it to a certain amount in a certain amount of time. Okay. And his goal was to take $500 and turn it into $10,000 in 90 days. Okay. Now, long story short, he was able to do it in 89 days. He was able to reach his goal. Now, he didn't just reach his goal, guys. He smashed his goal. Okay, in 89 days. He was able to take $500 and instead of going to 10,000, he didn't take it to 50,000. He didn't take it to 100,000. He didn't even take it to $500,000. Guys, in 89 days, he was able to take, because of the power of compounding and what he knew about compounding, he was able to take that $500 to just over $1 million in 89 days. He broke the $1 million threshold on the 89th day. $500 to just over $1 million. Now, I don't tell you this to impress you. I tell you more to impress upon you that if you understand the concept and the power behind compounding your profits and what we have with this financial vehicle, those are the outcomes that any individual can see. If he was able to do it, who's to say you can't? Who's to say I can't? Who's to say Joe Schmo down the street can't, right? So knowing the power of compounding and knowing how to take advantage of this financial vehicle, you too, anybody can do what Mr. Unemployable was able to do. So power of compounding. What is the power of compounding? Okay. So if you're not familiar with it, okay, once you have everything down and able to be profitable long-term, you can start to compound your money and be on your way to building that financial security. Okay. Now, compounding your account 3%, 5%, or even 10% at a time is so powerful. That's how he was able to see these type of numbers. Okay. 7 and 8 figures. He's an 8-figure trader now. He started with a small account and grew it in a very short time period. Okay. So now, remember earlier I told you that big banks, big banks and big institutions, they take all of their money that they make, they put it into the Forex market. Well, if you go to a bank and you deposit $10,000 in a savings account, do you know that they are, by law, they are able to take a percentage of your money, your hard-earned money, and they are able to invest it in whatever the hell they want. And do you know where they go? 99.9% of the time, where they go to invest your hard-earned money is this financial vehicle, the Forex market. They put their money in here. Almost $7 trillion a day goes through this market. Why would they not put it in here? Okay. So they take your hard-earned money and make hundreds of thousands of dollars off of it. And what do they give you in return? They give you 0.5%, maybe if you're lucky, 1% a year on the hard-earned money that you worked hard for, and they go and capitalize and make hundreds of thousands of dollars, and they give you pennies on the thousands of dollars. Okay, guys, we are here. Me and my team are here to show you how to remove the bank, kick the bank to the curb, and make 3%, 5%, even 10, 15, 20% a day. Those numbers are not outrageous to meet on a daily basis. Okay, so kick the bank to the curb, learn this skill set yourself that nobody can take from you, and make these types of numbers. Okay, so if you stick to your trading plan and trading strategy, the income possibilities truly are limitless. They're limitless. There's nobody telling you how much you can make in a certain amount of time. You don't have somebody saying that you can only make a certain amount a day, a certain amount a week, a certain amount a month, a certain amount a year. Okay, there's no limit. The limitations are all based on you and how you implement the skill set. Okay. So compounding interest is the eighth wonder of the world. He who understands it earns it. He who doesn't pays it. He or she. Okay, he or she. Ladies. I don't hate to say it to you guys, but fellas, I hate to break it to you. Women tend to be better traders than us in a quicker time frame because they are they are just better at their discipline and their patience. Sometimes we have to be patient. We might think we see a setup, but the market hasn't really gotten to us. They always say, let the market come to you. Okay. A lot of times, guys, we are not patient enough to let the market fully come to us. Women tend to be more patient and more disciplined with their emotions. Okay. So really quick, let me show you the power of compounding, and then we'll get into what Epic Trading offers. And then we'll get into Q&A, and we'll be pretty much set here, guys. So two options. If I gave you two options, what would you prefer? $10,000 a day for 30 days. Okay. $10,000 a day for 30 days. Let's all do the math really quick. $10,000, 30 days, $300,000. Okay. We all can agree on that. $300,000. Okay. Or would you rather me give you a penny and double those pennies every single day for 30 days? Okay. Now you guys might know the concept of this. You might already know whatever, but I want to show you the daily results. Okay. And show you the power of compounding and how, if you don't know the power of compounding, when you first start profiting, if you don't know the outcome of compounding, you can get discouraged. Okay. So let me show you really quick. Now, again, watch what happens to this penny when we double it over 30 days. Well, we already know for option A, $10,000 a day, right? We're going to fast forward to 15 days. Okay. Now the penny, $163. Okay. Halfway through the 30 days now, we're at $163. Well, where will we be with option A? $150,000. Okay. Now, those of you who don't know the power of compounding, you would probably be crapping your pants, right now, because you'd be beating yourself up, pulling your hair out, like, oh my God, what am I would have be at $150,000 already right now. Okay. So let's fast forward to day 20. Okay. We're going to go 5 days in the future. Okay. Now, not too bad. We're at $5,200, but had we chosen option A, where are we at? 200,000, right? 200,000 versus 5,200. We only have 10 days left. Now, we saw what it did in the first 15 days. We saw what it did in the next 5. How are we going to get close to 300,000 in the last third of the time frame, right? Okay, watch what happens in the last 10 days. This is the power of compounding. Now, if you don't allow yourself to get that deep, you're not going to know the end result. That's why it's important to know the power of compounding and know what the end result can be. Guys, look what happens in the last 10 days. We went from $5,200. We blew right past $300,000 to $5.3 million in 30 days, starting with a penny. Okay. So that's the power of compounding. Okay. Power of compounding is super, super important. That's why compounding 3%, 5% daily, that adds up. And these are the type of numbers that you will start to see. Okay. That's how Mr. Employable was able to take 500 to just over $1 million in 89 days. All right. If he can do it, you can do it. Right. Who's to stop you? So, okay, so that's it with the sections. Now we're going to talk about kind of what people have paid, what you get if you decide to become part of Dynasty Exchange and take advantage of Epic University, and then we'll open it up for questions, guys. So, what if people paid for Forex education? Well, people paid a lot. Okay, if it is like a monthly fee or a recurring fee or a membership or whatever you want to call it, a subscription. A lot of times with those, there is an initiation or a setup fee, which could be $200-300, and then you pay a monthly fee. And then once you get in, there might be upsells, upcharges. You might need to pay for this. You might need to pay for this strategy. You might need to pay for this indicator or something like that, right? So next thing you know, you're paying $300 to set up, then you're paying $200-300 a month. Okay, so now other Forex educational platforms, they don't allow recurring payments. They make you pay up front. Okay, we actually have people here in Dynasty Exchange who have actually paid upwards of $10,000, even upwards of $50,000, even more, to learn this skill set, okay, with other avenues, other Forex educational avenues, okay? It's crazy. People literally go out and got loans, okay, personal loans to learn the skill set. And where are they at now? They're literally here inside Dynasty Exchange, learning from Epic, learning from our Dynasty Exchange educators. And I've had some of them tell us within the first 2-3 weeks, they learned more with what Dynasty Exchange and Epic Trading provide than they did on the $10, $20, $30,000 that they've spent over with this other educational platform, guys. So that just shows that the value that we hear is top notch. Okay, the educational content that we have, the master traders that we have access to, amazing. Okay, so the value that you are getting. Okay, so when you become part of Epic Trading, okay, there's certain or any type of educational platform. These are some of the benefits that you could possibly see in that opportunity. Okay, Trading Academy, that's like e-courses, having pre-recorded e-courses where you can go and learn them, and they're kind of like college courses or whatnot, right? And then of course these are kind of average prices. Okay, you get the Trading Academy, live sessions with master traders. Okay, you literally can log on like we are with live master traders. Okay, and ask questions just like you can here. You can go in a chat, ask questions. They'll answer your questions. They literally just go through, they look at charts, they show their strategy, they show their setups, they look for setups, and they kind of teach you as they go, as they do their analysis and stuff. Okay, you get 3 of those live sessions a day through Epic Trading, and then we have our own with Dynasty Exchange that don't conflict schedules between us and Epic. So you can kind of learn from both, kind of 2 for the price of 1 type deal. But live sessions, guys, Epic Trading offers 3 of them a day. So you get 15 live trading sessions. Okay. Plus you get live study halls, you get live. So many, their live calendar is insane. Okay. Insane. Such an abundance of live education. Okay. And all of the live education is recorded and strict and organized, okay, where you can find the educator that you want. If you'd like to learn from a specific educator, you can find the educator that you want to learn from. It truly is a learn at your own pace. 100% learn at your own pace, okay? This is not scheduled, none of that. You learn at your own pace. It's fully accommodating to your busy life, your busy work schedule, okay? Now, trade alerts. What is this? This is something we call earn while you learn. What does that mean? Earn while you learn. Okay. Well, exactly what it says. Earn while you learn. You have the ability. These master traders, what they do is they will do their analysis and they will send, there's a chat, a Telegram chat that you can actually have on your phone, turn the notifications on. And when they send out they'll do their analysis and they will send out what we call a signal or a trade alert. Okay, that trade alert will have whether or not it's a buy or a sell, what pair it's on, where to put your stop loss, where to put your take profit, and what entry to get in on, what number entry to get in on. So they basically send you the set it and forget it parameters. All you have to do is copy and paste, plug it into your trading platform, hit enter, hit execute. And your trade is executed, and then you put your phone away and boom. If it goes against you, it hits the stop loss. If it goes for you, it hits your take profit. That's it. Earn while you learn. So all you need to do is learn how to comfortably push buttons and enter the numbers that they send you. Okay. So earn while you learn, trade alerts. Okay. You get all these different strategies from the actual master educators, the master traders. You get all these different strategies in the back office as well in a university. Okay. You get the 2-week syllabus. What is the 2-week syllabus? If today you guys decided, Brian, this is amazing, I got to take advantage of this. Then what we would do is we would get you plugged in with Dynasty Xchange and signed up for your university with Epic Trading. And then in the back office in the university, you would actually access the 2-week syllabus. Okay. And basically what the 2-week syllabus, there's people that have done the 2-week syllabus in like 2 days, 3 days, 4 days, whatever. The 2-week syllabus is going to get you comfortable to where you feel comfortable placing those trades, copying and pasting those trades, or watching the live traders and going along with them on their analysis. It's going to get you comfortable looking at a chart, watching somebody mark up a chart, being able to place a trade, hit the buttons and stuff. Okay. So that's what the 2-week syllabus, it gets you prepared to actually start learning and feeling comfortable going through the e-courses, going through the live sessions, going through the trade alerts, all that stuff. Okay. So now, if you got all of this, okay, and you added it up individually, it would be upwards of $50,000. If you added all this up, it would be upwards of $50,000, just under $50,000. Now, what is your financial security worth? Is it worth $50,000? Let me ask you that. Is your financial security worth $50? Now, when we talk about financial security, let me paint this picture for you. Okay, financial security in this situation. Okay, in this situation. $50,000. Okay. I already mentioned that you can learn this skill set. Okay. You can learn this skill set in a year or less if you take it serious. Okay. If you dedicate the time, the passion, the desire, the dedication, you can learn this in less than a year. Okay. Now, if it was $50,000, would that be worth it to you? Would it be worth it to you to find financial security? Now, remember what I said earlier. $50,000, okay, to learn a skill set that there's no cap. It's not like if you were to go and become a brain surgeon, okay, go into the medical field, become a doctor or something. You're sacrificing 8 to 10 years of your life. You're going into debt, $200,000 plus dollars, right? 8 to 10 years of your life, you never get back, $200,000 in debt. And you get hired, you're pretty much told how much you can make, right? $400,000, $500,000. In this opportunity, nobody tells you how much you can make other than you. Okay. You. Okay. So if it did cost $50,000, would that be worth it to you? Would your financial security be worth it to you if you only had to sacrifice a year of your life and not 8 to 10 years of your life, right? And have nobody tell you how much money you can make. You can make $1 million in the first year. Think of this, guys. Really, I want you to really drop your goggle, your blinders, and really shift your paradigm and listen to what I'm getting at. To me, my financial security is priceless. My financial security is priceless. Okay. Now, what Epic Trading does here, okay, they have what they call a scholar tuition fee. Okay. To get involved with Epic Trading, there's no setup fee. You don't have to pay $300. You don't have to pay, it's just a recurring fee, okay, which we call a scholar tuition fee. And it's nowhere near $50,000, okay? How much do we pay? We pay, like I said, it's a recurring fee, $135, okay? $135 every 4 weeks. So this is the rest of the picture that I want to paint for you guys really quick. I gave you the option if you wanted to find financial security in the medical field. What are we doing? We're going to school for 8 to 10 years of our life. We just wasted 8 to 10 years of our life. Time, the most precious commodity we have. We'll never get it back. Okay. $200,000 plus dollars in debt. Okay. And we come out to get a job where there's kind of a salary cap. We can only make $200,000, $300,000, $400,000, right? A year. Okay. With this opportunity, okay, $135, if we were able to learn the skill set in a year, like I said, what is $135 every 4 weeks? It comes to just under $1,700. Now, $1,700, a year of your time, and it's not even like crazy dedication like you would have to dedicate if you were to become a doctor. Like that's like crazy. You have to dedicate like your entire life. Okay, you could do this part-time on the side while you're doing a job and in a year can learn this skill set for under $1,700, only do it in a year, and have limitless income opportunity. $1 million, $2 million, $3 million a year. There's nobody saying that you cannot make $5 million a year trading Forex in the next 2 to 3 years. Okay. Think of this, guys. Really shift your paradigm. Okay. $135 every 4 weeks. You want to cancel? There's no contract. You want to cancel? You click the cancel button. You're canceled. That's simple. Okay. Now, really quick, for the $135, what do we get? This is the last slide, and then we're done. $135. What do we do? What do we get? Well, we get access to Epic University. Okay. Nothing, no a la carte here, no upsells. Everything is included in the $135 once you get inside. Okay. You get access to the Epic University. That's the trading academy. Okay. You get the trade alerts, the earn while you learn signals, the copy and paste signals. You get the 2-week syllabus and the training. You get all of the strategies from the master traders. Okay. You get access, all of the strategies that we have within Dynasty Xchange as well. Okay. You get a trade community. Epic Trading has its own trade community, which is much, much bigger. And then you have a smaller trade community within Dynasty Xchange. We're more like a family, very tight-knit family. Okay. You get small group study sessions. Remember, I don't know if you remember earlier, I said, if you, they have study group. Okay. Live study group. If you don't understand something on one of the live sessions, you can go to the live study group and you can actually, bring it up and say, hey, I don't understand this part of this strategy or what have you. And they will help you understand it. Okay. Live session access. Remember, that's the live session where you can get on and learn with the live traders, ask them questions, about their markups and how they're doing their analysis and all that good stuff and much more. Guys, Epic Trading is going to be implementing in 2021 what they call Epic Trading for Kids. Okay. Epic Trading for Kids. That means that you, with your $135, you can include your child. If you have a 9, 10, 11-year-old, 12-year-old child who you want to help learn with you. Okay. It could be a cool bonding experience with your child. But more importantly, guys, in the US, I don't know about in other countries. I know in other countries they actually do. But in the US, financial literacy, okay, is not a big thing. They don't teach kids that. They don't even teach that in high school, really. Financial literacy and knowing about finances and stuff like that. Okay. So why not have something where you can have your child learn financial literacy, learn how to day trade before they're even able to day trade. Okay. So super cool things coming in the future. We just implemented binary options. We just implemented crypto to learn how to trade crypto, learn how to do binary options. It's just new stuff. And like I said, Epic Trading's only been open since October 1st. So super excited, guys. All right. So that's pretty much it, guys. $135 a month, cancel anytime. Within a year, if you can learn the skill set, you're less than $1,700 out of pocket, no debt, because you made the payments monthly. So once you learn the skill set, there is no debt to pay back. Okay. And you have the opportunity with trade alerts, or if you go join the live trading sessions and you make money with the educators, you're making money to be able to cover that tuition. Okay. So you have to think of that too. Don't just think of it as money coming out of your pocket. In a very short time, you can start making money. Okay. On the inside, and making money that can cover your scholar tuition and to actually put aside and pay bills or do whatever you want with it. Okay. So, now if this shift, before we go to Q&A, I just want to say if this info has shifted your paradigm, and it has you where you want to, try to secure your financial future, and you want to become part of Dynasty Xchange and take advantage of what Epic Trading University has to offer. Do me a favor, get back with the person that brought you to my presentation. They will get you plugged into Dynasty Xchange as well as Epic Trading University, and you will be able to start. You would literally be able to go right into the 2-week syllabus right away.